This is a question that I haven't been asked in a very
I've never heard this
in a very long time. But so you can sell a life insurance policy, and there's like funds that actually buy life insurance policies from people.
Okay.
Elderly people. It's kind of like a reverse mortgage in a sense. So like let's say somebody is 70 years old and they have a $200,000 life insurance policy and they need money. Like they don't have any money to actually live, but they do have an asset, which is a life insurance. So now the company would buy the life insurance policy, let's say for $40,000. So it's $40,000 to you, but they'll based on the expectancy that you'll probably die within the next 7 years, right?
Yeah.
So it's like, okay, I pay $40,000 today for $200,000 that will mature in 7 years, right? So that's something that, like I said, I haven't been asked that question in a long time, but I guess they saw a commercial and they was asking me about it. So that is something that it is a strategy, but it is important to keep in mind if somebody's going to buy an asset, usually they're not buying it unless they're going to make a high rate of return.
Yeah.
Right. It's like anything.
Minimum
right?
5x.
Yeah.
Yep.
So that's why it's important to have other planning in place. Like last week we talked about retirement planning, we talked about investing, because you don't want to get to a point where that's your only asset to sell.
Yeah.
Because you're shortchanging the amount, but also now you no longer have that life insurance policy as far as the beneficiary is not. If you were going to leave it to your grandkids, now they're screwed.
Yeah, stuck.
They're done. But yeah, that's something that hedge funds have been doing for a while, and they buy up life insurance policies. They go and they look. It's like a distressed asset.
Yeah.
They see who's vulnerable. They see who might.
Selling the life insurance is crazy. Shout out to you record labels who've been doing the same thing, and they've been giving the moms the money when they die.
Yeah.
We're gonna talk on Blackout
one day. But everything's a business. Everything's a business in America, and they found out that was actually a viable business opportunity that they can, because it's guaranteed, and they pay the premium. So they'll take over. They'll pay the premium, but in return they'll get the death benefit when you die.
They doing this on term or whole?
Yeah. How expensive is the premium?
Well, it's the same premium that whatever it was.
So what? Okay, so that would be like if somebody got a life insurance policy on their elderly parents. Very similar in that sense, where the premium is going to be a little bit more, obviously.
It depends when you get it. Like I'm saying, like somebody can get life insurance when they're 40 years old,
right?
And they have it, and they paid premiums for 30 years,
right?
And now they're 70. So you ask term. They don't do it on term. They do it on whole, because term is expired. So it's all based off of calculations. So they want to do it on what the probability that you're. So that's why like the 70 is a sweet spot, because like 78 is like the life expectancy, 82 something like that. So you buy it on an elderly person.
Yeah.
That person probably already had life insurance for a while, because you can't get life insurance at 70. It's going to be difficult. So they probably already had it for at least 20 years.
Yeah.
So if they paid the premium since they were 50, they're just going to take it over. They're going to take the premium payments over. And now they're just sitting and wait for you to die.
And buy them in bundles.
And then exactly. So now if you got a whole portfolio, if you got $100 million in life insurance that you've purchased for, let's say, $20 million, you've essentially, you're buying money.
Absolutely.
With the maturity date, and so it's like bonds in a sense, right? Where it's guaranteed. You're paying a premium. So let's say that premium so let's say by the time you finish paying the premium, you're gonna pay $40 million on your portfolio. So you're gonna spend $40 million, but you're gonna get $200 million
guaranteed, because everybody's gonna die.
Yeah.
Yeah.
Is that transferable? So like, what if the person who's buying it? Well, you said it's a hedge fund, so it's a little bit different. But if it was an individual, is that transferable? Is that something that can be passed down? Like, how would that work?
Is what transferable?
So like, if let's say me as an individual, or I have an LLC or a company that is now buying these insurance policies. Let's say I do it on 20 people. That's under my portfolio, right? That is a transferable asset to my son, my daughter.
Probably upon liquidation.
No, it's going to go to your company.
Yeah,
it's going to go to the company. Yeah. So it's not like a personal thing. It's in corporate. And so like I said, it's kind of like a reverse mortgage. We haven't spoke about that in a while, but
what's that called?
Viatical settlement.
Viatical settlement. Okay. I need
So-
to get some insurance on some of y'all careers who die. I ain't gonna lie.
The life
Cash
expectancy
you out
of your
today.
What is the life
I
expectancy?
hear
of
you. Let me
your
cash you out
career?
today, my boy. I hear you.
We going
Yeah, for sure.
they were like, no, we can't insure it.
But also, if you have an elderly person in your family, just make sure, because they'll get targeted, so they might not fully
Absolutely.
understand. They say, "Oh, why somebody gonna give me $40,000 today?" That sounds good, And like I said, it's like a reverse mortgage in a sense, where a lot of times people can't pay their mortgages anymore, so somebody they'll buy out the home, so they still live in that home until they die. But when they die, now the home goes back to the fund or the bank or whoever the
person who bought it, yeah.
So it's like, okay, I'm gonna take care of your mortgage. That sounds good to somebody until they realize that, yeah, they're paying your mortgage for 3 years to get your home.
Yeah.
So it's like, what's 3 years of a mortgage payment for $1 million home?
Yeah, for real. 700,000 out the, oh my God. Be careful.
That's a hell of a flip.
So yeah, so gotta be careful. All right.
It's a
The
great
predators
segment.
and the prey.
Absolutely.
Yeah, it's always gonna be a way to. It's always a way to make money.
Viatical settlement, word of the day.
Right. It's always a way to make money in America. You just got to figure it out.
Word to Ted DiBiase.
Okay. So what does the phrase "the bigger the base, the higher in space" reveal about market dynamics in 2023?
Yeah, because I think we're going to get to a place depending on what this Fed cut is. If you look at, let's say, Intel, I know I picked on Intel for a long period of time. If we look at the chart, they are at levels from 2008, 2009.
Nasty.
If you truly believe that the government giving them money is going to help long term, this would be a good place to begin to build a base in this company. Building a base is just buying a bunch of shares at a certain price and then expecting it to go up for 4 or 5 years later. Intel, I don't think will do that. But I think when we're having these moments of consolidation and people are being afraid if the rate cuts are going to happen, find an asset that you like that is distressed in the same fashion, buy a bunch of shares at a particular price, give it 4 or 5 years to go up, and it'll be A-okay. Now, NVIDIA, they are over-indexing on AI. They are the main supplier in the AI space, so that's why I say Intel won't do well. But if you look in crypto, if you look in small caps, you may be able to find a company that is not moving incredibly fast and then be able to buy a bunch of shares at that price, and in 3 or 4 years, it's going to go up.
Yeah, it reminded me of kind of what we talked about last week, when you see downturn, on the other side of that is potential gains.
Yep.
So the longer that a company trades sideways, and some of these companies are really good. Like a lot of times people will look like, isn't that a good company? Yes, it is a good company.
Yeah.
It's just consolidating right now, right? It's trading sideways. But on the other end of that is that when it's down like that or it's trading sideways, there's going to be, if it's a great company, the potential growth there is there. And so you have a growth stock that'll perform well. But it takes discipline, it takes seasoning, and it takes patience.
It does.
Right? Because when you see an NVIDIA go up 143%, or you see Supermicro go, you're watching these things and you're like, wait, I'm missing it. And sometimes the wins are in, let's talk about Apple.
Yep.
Just 7 years ago.
Yeah.
It was trade. Why was it not moving? Well, it was consolidating, and obviously the pandemic happened, and then boom, Apple goes on a run.
Yep.
Amazon has done it before too. So solid companies will consolidate. Sometimes it'll take 5-6 months. I know people are looking at Google like same. Is it a
Give it
strong
time.
company? Right.
Give it time.
Just give it time. When it's in a consolidation phase, realize that there's going to be an upside that you can have extreme growth in. So just be patient.
Patience always pays, but you have to do it in a quality company.
That's the key.
I forgot one thing about the Viatical settlement that ChatGPT reminded me, which makes it even more like, shows you how like American capitalism works. So most of the time it's actually done, I said end of life, but so it said Viatical settlement is a financial arrangement in which a person with a terminal or chronic illness sells their life insurance policy for a third party for a lump sum payment. The buyer of the policy becomes beneficiary and assumes responsibility for paying the policy's premium upon original payer's death. Typically, the payment the seller receives. So this is the important part. It's usually for people who need immediate cash to cover medical bills and living expenses or financial needs while they're still alive. So it's like, all right, you have brain cancer. You got 6 months to live.
Yeah.
And you don't have enough money to actually, so it's a multi-layered conversation. This speaks to the American health system as well. People don't have enough money to actually pay their medical bills, right? So it's like now you got somebody in Wall Street that's like, okay, this person in Nebraska has brain cancer and they're about to die, but they don't have enough money to actually even get chemo.
Yeah.
You got a $500,000 life insurance policy. I'm gonna give you $50,000.
Yep.
So at least you can get chemotherapy for a couple of months. After that, your life insurance policy is mine.
That's crazy. This happened a lot with AIDS patients in the 90s as well too. That was a big cash grab for a lot of investors, and it came out maybe 10 years after that they were doing that. Yeah, it's sad and sick. Yeah, it's a crazy world we live in, especially on that insurance side. But
yeah,
what you gonna do?
It's always gonna be
What do you do?
a shark in the water.
Always arbitrage.
If you need it, what you gonna do?
Yep. But pay attention to the numbers. They're looking for 5x return, number I've told you about endlessly. Every asset class are looking to exit around the same area. Please be careful. And going back to the healthcare issue, this is when these conversations about how much money do you need and levels of wealth. You can go bankrupt really fast in 2 or 3 months if going through chemo and radiation. If you don't have the money and insurance doesn't cover it, you can run up a bill for $200,000-$300,000 in 2 or 3 months.
For sure.
Easy.
We got to talk about long-term care 1 week too, because that's another way you go. Even nursing homes.
Yes.
Those nursing homes are like $30,000 a month.
A month?
Some are. And get the house. Yeah.
Yeah. That's a fact.
Shit is real.
Yeah, that's like a month. So if you don't have, what happens is that they exhaust. So with them, that's an interesting case study too, because they're like, okay, well, the government comes in with like Medicaid, Medicare, whatever. But they only do that when you have no money. So you got to exhaust all of your retirement account, all your bank account. They like, you literally have to be poor,
almost destitute.
Then the government will come in and supply some help. So yeah, that's another thing. You save your whole life for your 401k, and then you get dementia, and now that 401k is gone in a year.
Yeah.
So that's why you got to plan for that as well. Or now you got to live with your son or your daughter, and now that's a tremendous stress that you got to put on there.
Yeah.
Because it's like you're not gonna have your parents just out in the whim.
Yeah.
But they're not equipped to take care of them.
You gotta build the West Wing for them.
Yeah. So all of this, it all comes into play, man. You gotta, cash is king, and preparation is important.
Absolutely.
On all fronts. Like it was like I had this conversation with my parents. It was, how does this work? Do you take care of your children your whole life, for your children to then take care of you while having children? So how do we break this cycle? It's planning. That the answer is planning.
Yes, a lot of planning.
That's the overall answer that we came to the conclusion is like planning, right? Because if I'm preparing for the next generation to take care of the generation before me, it's a strain. Yeah. It can be. We've been blessed. I'm extremely blessed. I'm not complaining. But like everybody's not in my situation, and everybody may not have a situation like, hey, mom and dad, you can come live with me.
Yeah.
So the planning part the conversation needs to happen, but the planning phase needs to happen right after the conversation.
So ChatGPT says in New York City, nursing homes could exceed $15,000 a month. So maybe not 30, but that's just bare minimum. If you want other,
15 bands is a lot.
No, for sure, $15,000. Yeah,
and that's not for exceptional care. That's base level.
Right. And if you want like other specialists to come in.
And private doctors, that's a whole another
thing. Telling somebody to pay, asking someone $15,000 when they've lived on fixed income potentially for the past 10 to 15 years is crazy. Then asking somebody who might be their children to now afford, most people are renting, but let's say you are average mortgage, $3,000 for $15,000? Wow.
Yeah, healthcare.
And then to not get the best coverage, like if your family is in those nursing homes, you better go check. Because the abuse levels.
You want to put them in the best one. You want to have them in close proximity to where you are so you can get there.
Private room. You can have a roommate. That's like, this medical system, man. Medical system, biggest business in America.
Absolutely.
Biggest business in America.
At every level, they'll find a way to extract money out of you. College, tuition, marriage, the health care. And then that's the crazy part. They'll put you in a nursing home and then put you on more medicine to run the insurance up. Then end up having to pay out of pocket.
Insurance is a whole...
It's a whole another...
Crazy. Yeah.
Gotta make sure.
You pay it, then when you need it, they don't want you to use it. Then when you do use it, they up your premium.
Yeah.
like there's a race that you can't win.